Hey traders, Nick Shaheen here looking at XP Engineering. So XPEV is the ticker for an EV. One of my only three EV plays as far as newer stocks are concerned. I think the overall EV winner will be one of the legacy cars. By winner, I mean the most EVs on the ground. I know Tesla has a first mover advantage at making the opportunity, but the other ones have been entrenched so long that it'll be easy for them to flip. I'm seeing, I live in Tesla land, Southern California, like every other car is a Tesla. And now I'm seeing more and more Audi e-trons of all versions. Um, in my neighborhood, there's at least three that I've seen. So that's how it started for Tesla. And it's easier for a giant like the biggest car maker in the world to flip EV if that's the case. I'm not convinced the EV is the future. It is part of the future, but it's not going to replace ICE, the internal combustion engine, and dominate as much as ICE did. It will be a hybrid version because it's not creating energy right now. Electricity to charge our EVs is not really good. It's fossil fuel based, and it's expensive, especially if you live in an area where you buy electricity as opposed to generating your own if you live close to a dam or something like that. So anyway, long story short, good company, good opportunity. I shared it long. All this negativity I started with, I shared it long not too long ago, and it played really well to the members. You too can become a member into the chat room. And the long was in several different ways. So at one point, not too long ago, on 429, I said I wanted to get long. The stock was at $30, and the upside opportunity, I shared it in four different ways, two different methods. One, buying upside hope, one, selling downside risk. All played out. Those who bought calls at the time started out with $3.50. Now they have $8.20 per contract. So one contract is $500-ish, 400 and something. If somebody did it with a call spread, cheaper to get into, they still 200% return on their risk. Those who didn't want to spend any money and just sold risk against opportunity, they created money out of thin air. These people created $100 out of one contract sold, and somebody who sold a call put spread bullish, both bullish. They created 50 cents per contract out of nothing, out of thin air. So what now? This is not an obvious point of entry, okay? Now it's running, but it's running into something. Plus, the whole market is shaky. Not that it's going to collapse or anything, but the S&P this week has the clearest line of breakout I've seen in a long time. And usually, when it's that easy, it's probably not going to happen. If it does happen, this one will take off. But here's the scenario I see here that I think is better. Let me get rid of this one. So I will draw it, and then we'll pull up my lines to see if they gem. Here's my concern. Here's my concern. Here's my concern. Why is that a concern? These are pivotal levels. So it's going into a place where meant a lot in the past, in the recent past. So it's not going to be easy. So why not fade a little bit? Buyers should step in above the entry level I had. 30 was the entry level. I think 32 will be a good place to hold. Chop your way back into the prior fail. Now you've earned the right to break out of it. This is too strong to just come back and slice through. So they should earn it. And then what does that look like? An inverse head and shoulders, right? Look, you got a shoulder, a head, and another potentially drawn shoulder. That would make for a much better, much cleaner, much more sustainable breakout with a lot of resistance around 48. So the upside pattern, technicians will tell you, when I say technicians, I'm self-taught. This crap is easy to pick up. So I don't usually believe in immediately pricing out the top line. So the upside is as big as this, so eyeballing somewhere right here, but I think that this battle right here is going to be fierce. And then again up here. So take it one line at a time. Fundamentally, this is a good company. It has a P&L, unlike other, I'm not going to name names because then the trolls will come out and beat up on me. It has a P&L. NIO has a P&L. Tesla has a P&L. I can quantify the risk below, and I know what I'm paying for. For example, in this case, let's pull it up. I'm paying for something I can quantify. It's 22 times sales. So I know I'm taking a risk equal to what Tesla was not too long ago. I'm looking at the P&L. Revenue went from this little to this big. So I know there's like 1.3 billion book of business. There's something leaving the factory doors, right? NIO, the same deal. Whereas other companies are promising this and promising that. I'm not a promise kind of guy. Give me tangible numbers, I'll risk it. The other ones, it would be too much of it. Why bother? These are better, in my opinion. These three, I have quantifiable metrics. I can use them to put a scientific trade, and win or lose, at least I did my best. The other one, there's too much hope. I'll leave it for the lovers of stock. I like making money with quantifiable facts. Opinion aside, I take the facts, I set a thesis, I manage my risk based on the success percent of that thesis as price develops. Period. End of story. Make it a system. Repeat, repeat, repeat whenever it works, and whenever it doesn't work, walk away. That's what we do. All right, so good company in a rising market. The EV opportunity is real. And the challenges to the internal combustion engine is real. So there's room to grow for everybody. Who's going to win? Somebody who's already selling stuff, and somebody who's been selling stuff for decades, the legacy guys. So legacy plus these three plus wherever else, scraps are going to go to a niche market. That's my personal opinion. But it doesn't matter to this trade. Whatever this ticker is, I'm not a buyer into a prior fail like this one. Those are my comments. I guess I should have led with that. But I'm not a short either. You saw what I said. I was long, and I would buy the dip again to repeat what just happened. And let me see if we can put my lines. All right, so losing this was trouble. Indeed it was. They went to here. Last-ditch effort, support, they held. Why? Because this was a prior pivot point. That was the base from which they did this. They fell, they defended it, they fell, they defended it. Now, if they had lost it, the outcome was unlikely, and that was the best. The bet that this outcome was unlikely, but if it does happen, this is potential. But it never did, because I said, let's go long. And this is what happened. So it ran through one level of resistance, another level of resistance, and it's headed into a third. These two should have failed. They didn't. This should fail. Maybe it will, maybe it won't. I'm not saying short it, but if I'm starting longs, I may be starting too late. At least, here's the thing, wait for this one to break out. Let them take this one out on a closing basis, then chase it. So this is a daily candle, nothing fancy. If you wanted to get shorter term action, then you get into nitty-gritty with 2-hour candles, for example. And now you can see where it is, where the open was on that candle, this one right here, where the close was. And it's right in between both. Look at this candle, very close to this candle right here. So have to pay attention as to what happens. This is like very mechanical, methodical. Chug, 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 chug. It's almost, look at the candles. They're very perfect. Anyway, Nick signing out.